In the last video, we borrowed $60 of cheap capital. Today, we put it to work. If you're new here, this is video number 3 in our DeFi series, where we're building a real portfolio that pays you daily cash flow step by step. Last video was the borrow low part of our DeFi carry trade. This video is going to be the earn high part. We're going to take that borrowed capital and deploy it into a concentrated liquidity position. When it's set up right, you earn yield around the clock from trading fees. You get paid when other people trade. Let me show you exactly how it works. So here we are in the Overseas DeFi app. The wallet is connected and we can see our portfolio. So we have our lending and borrowing position here. We collateralize that Coinbase wrapped Bitcoin, borrowed 60 USDC against it. So that's where we stand today. Now we're going to generate some cash flow with that borrowed capital. So the first thing I want to do is take a look at the price chart for Ethereum. This is a 4-hour chart. Each candle represents 4 hours. And I just want to point out some of the resistance and some of the support areas. Over here, we had the February 5th low, and that came out at $1,742.79. And then we had this level here at 2030. I'm pointing this out because I'm seeing a lot of matching highs and lows on the chart. So for example, this high right there, this high in that area, this low here, this high, these lows over here, and the low right here, and the highs right here. So this is a very important level on Ethereum, and that's going to act as the upper bound of my range. We're doing concentrated liquidity positions, which means we need to designate a specific price range. We're going to concentrate our capital in that price range, and that's how we're going to earn the high yields. So the top of my range, I want it to be around 2030. For the bottom of my range, I'm going to go pretty wide with this position, a little bit wider than I normally do. I'm going to use 1,742, thereabouts. Okay, so that's the range I'm going to use. Next, I'm going to go to Krystal. I have filtered this for the Base and Arbitrum blockchains. So you can see Base and Arbitrum selected on that filter. I've also filtered it for only Uniswap v3. That's our favorite DEX for providing liquidity. And I'm looking at all wrapped ETH stablecoin pairs. So what this website does is it measures the total yield based on 3 factors. The first factor is the fee tier. You can see that 0.3%, 0.05%. That is the fee that traders pay to liquidity providers. Obviously, the higher the fee, the better the yield for liquidity providers. The next part is TVL. So that's how much money is in that liquidity pool. If there's more money in there, that means there's more liquidity providers with which we need to share the fees. So actually more TVL, it means we're sharing the same fees amongst other liquidity providers, more liquidity providers. And then the third factor is the volume. And this is fairly obvious. The higher the volume, the more trading that's happening, the more fees are generated, the more yield for us liquidity providers. So those 3 factors get baked into the cake here. And then the last thing I'm going to show you here is the time frame. So I'm going to look at a 7-day APR. So this website is calculating the annual yield based on the last 7 days of volume. And then I'm going to sort it by which one has been paying the best based on those 7 days. And we can see here the 0.3% fee tier on Uniswap v3 on the Base blockchain has been the top performer. Let's zoom out to a 30-day APR. So again, this is the annual rate, but it's based on the last 30 days of volume, factoring in the fee tier, the TVL, and the volume as well. Again, 30 days of volume. And again, this 0.3% fee tier comes out on top. So this is the liquidity pool we're going to use for our position. So next, I will click into that liquidity pool and I will set my range. We're going to simulate the position. So I said 1,742. It defaulted to 1,737. That's a little bit lower than I want. So I'll click this plus button. That'll work fine. So 17 47 at the bottom of our range. We said we wanted the top of the range to be 2030. We're hitting that price almost exactly. So there's the range of our position. I have $60 to deploy into this position. Now this simulator is going to tell me the exact breakdown. So I need about $20 of USDC and $40 in the position. Okay, so that's the initial balance of my position, and that makes a lot of sense if we draw the rectangle here for this position. So if you look at that rectangle compared to the current price, you can see the price is down in the lower part. That means all this capital up here, that is our ETH shelf. So if traders start to buy ETH, the price goes higher. We need ETH in our position to sell to the traders. And if the price starts going down, that means traders are selling ETH. We need USDC in the position down here to buy ETH from the traders. Remember, liquidity providers are always doing the opposite of whatever the traders are doing. So let's go back to Krystal. And again, we need about $20 in USDC in that lower part of the position and about $40 of wrapped ETH for the upper part of the position. Now you can use Krystal to zap that capital in. I like to do it the old-fashioned way, so I'm going to go to 1 inch. We've done this before in one of the previous videos. Actually, the first video in the series, we showed you how to swap crypto tokens on a decentralized exchange. This is an aggregator, goes out and finds us the best exchange rate. So the first thing I want to do is select the input, and I'm going to use the base blockchain. That's where my capital is. I'm going to spend my USDC coins, and I want to trade 40 of those for wrapped ETH. Now this is already set since that must have been the last trade that I did on this site. But if it didn't come up like that, again, you're selecting the network here. It's already set to base. And we want to buy wrapped ETH, not regular ETH. We want the token version since that is what we're going to need to put into the liquidity position. So there it is, wrapped Ether. We click on that. Now we're going to swap $40 of USDC into the wrapped ETH that we need for the position. So I'll do the swap and sign. The green indicates the trade has gone through. So now we're ready for the final step, which is actually depositing our tokens into the liquidity position. So for that, we'll go to Uniswap. By the way, if you don't remember this or you haven't seen the last videos, make sure you do not do a Google search for these different websites in crypto and DeFi. The scammers will actually pay Google to have their scam website show up at the top of the list. If you're looking for a particular website, always use the DApp search. It's built into Rabby. So if you go into your Rabby wallet, click on this little settings button here, and then click on search dApps. This is going to bring you up a full directory of all sorts of crypto and DeFi websites. So you see Uniswap right here, the 1 inch exchange, any DeFi website that you're looking for, make sure you're using the official URL for that website. Let's go back to Uniswap. Now this is the default page. Of course, my wallet is already connected. If you watch the first or the second video, you've seen how to connect your wallet really very easy. And we're going to open up a new position. So I'll hover over pool, click on create position. Now, first things first, we're going to use the V3, the Uniswap V3 liquidity pool. So I'm going to select new V3 position. Next, we're going to select our token pair. So again, we're using wrapped ETH paired with USDC. That's one of my favorite liquidity pools. The yield is nice and consistent. So I'm going to select wrapped ETH for my first token. Now pay attention to this little drop-down menu right here. We need to select the correct blockchain. Uniswap has a decentralized exchange on many different blockchains. So we need to tell it which blockchain we're using right here. So I'll click on that and I will choose base. Now, the wrapped Ether is already right there. Since my wallet is connected, the protocol can see the contents of my wallet. If you didn't see that in the search, then simply type in WETH and select the asset. So that's the first token in our pair. The second token is going to be USD coin. So again, you could just type it into the search box, USDC, USD coin right there. And there's my $20. Okay, the last part is the fee tier. Remember, when we looked at this on Krystal, the highest yield was on that 0.3% fee tier. It is already selected. If it happened to be something different or you wanted a different fee tier, just click on this button here and you can select whatever fee tier you want. So I'll stay with the 0.3 and continue. So just scroll down and set your range, 1747, 2030. Now again, my wallet is connected, so the protocol can see the contents of my wallet. It sees the wrapped ETH and the USDC right there. I'm gonna maximize one of these two. I'm trying to put everything into the position. The price moves around. The exact balance isn't necessarily going to match with what I have in my wallet, but we'll do our best to get as much of this capital into the position as possible. So if I hit the max button on the wrapped ETH, let's see how it works. Okay, so we have 20 USDC, and right now that amount of wrapped ETH, if I max that out, it needs 19.58 USDC. Now, let me show you if it doesn't work. Let's say we try to maximize the USDC. If I try to put all 20 USDC in there, see how that number is red? That ends up matching up with more wrapped ETH than I actually have in my wallet. That's not gonna work. Let's go back to the wrapped ETH, maximize that out. And this number will change as the price moves up and down. But this looks like I'm about to get all of that capital minus 40 cents or so into the position. So let's review. So we're depositing approximately $40 of wrapped ETH and just under $20 of USDC. That's going to go into the position. So let's create it. Now there are 3 transactions that you will have to sign off on for this job. These are the token approvals. So a token approval is, just think of it as a permission slip. You're giving the Uniswap protocol permission to take those tokens out of your wallet. The default on Uniswap is going to be an unlimited approval. We don't want that. Let's click this button here, and that's going to set the limit to the actual tokens that are sitting in our wallet right now, the balance of our wallet. So let's sign and confirm on that. So the token approval for wrapped ETH is done. Now we need to do the USDC. Again, it defaults to an unlimited approval. Let's go ahead and set it to the 20 USDC that's actually in our wallet. Sign and confirm. Now, both of those tokens are approved. We've given permission for Uniswap to take both of those tokens out of our wallet. The third and final transaction is the real deal. This is where we're depositing wrapped ETH and USDC into the position, approximately $60 worth. And Uniswap is going to mint a fresh NFT. This NFT is our proof of ownership. That NFT will come to our wallet so that the protocol knows we own that liquidity position. So let's sign and confirm. And there we go. There's our position. The NFT is sitting in our wallet. Our wallet is connected to the protocol, so it can see that position. It is in range. Let's click into it. You can see the details here. As the price goes up and down, you're going to notice the balance of your position changes automatically. Traders are buying ETH or they're selling ETH. That price goes up and down, and the balance of our position rebalances. So at the moment, about 67% of ETH and 32 or 33% of USDC. Haven't earned anything yet, but come back the next day. You'll be able to see how much you earn in a single 24-hour period. Multiply that by 30, multiply it by 365, and you'll start to get a sense of the yield that you're earning. Last thing I wanted to show is here in the portfolio track, the Overseas DeFi app. I went ahead and refreshed the page, and it has brought up the liquidity position that we just set up. And you can see the range in here. You can see where the current price is. And as time goes on, we'll be able to see how much yield we're earning on this position. Take a look at the portfolio page. And again, you can see the total portfolio value now, including the liquidity position, about $60 in there. The lending and borrowing position, about $43 in equity. We supplied Bitcoin and borrowed 60 USDC. That 60 borrowed USDC, we've put that to work now to generate cash flow. So this is the DeFi carry trade right here. We're borrowing at a low interest rate and earning at a high yield. And that's it. Your borrowed capital is now deployed, earning a yield on every swap that happens inside of your range. That's the full DeFi carry trade. Borrow low, earn high, both halves are done. You didn't sell a single coin. Your Bitcoin is still yours, still working as collateral, and now your borrowed capital is working too. Now here's the thing, your position only earns while the price stays inside your range. What happens when the price rises above or drops below that range? That's exactly what we're going to cover in the next video. What to do when the price escapes your range. If you get stuck or you've got a question, I go live every Thursday at 6 p.m. Eastern. subscribe, turn on notifications so you can catch it. And if you want the portfolio tracker and the Overseas DeFi AI agent that I'm using in these videos, join the Overseas DeFi community, link below. I really hope this helps. Thank you so much for watching. I'll see you on the next one.